Hello, everyone. Today's Monday, June 8th. It's about 2 p.m., and I'm checking into our paper account that we check in every single week with. And this week has been a reminder that investing isn't just about picking stocks, it's also about managing emotions and understanding how markets work. We've had a lot happen in a short period of time. The jobs report came in stronger than expected, which suggests the economy is still creating jobs and remains relatively strong. However, a stronger labor market can also mean the Federal Reserve may be less likely to cut interest rates as quickly as some investors were hoping. That creates uncertainty, and uncertainty often creates volatility. So we are currently looking at AMD, and this would have been last week's price action. So we was hitting these all-time highs, and it did its thing, and then we did another all-time high, and then we kind of hit a ceiling up here. And then later in the week, there was some taking of profits, and then the buyer stepped in, bought some stock, and then this would have put us probably around Thursday here. And now you're starting to notice the taking of profits and then a lot of selling off. So we dropped down just about from 546.14 down to around 440. I'm sorry, 464. About $80 a share last week. And that fell on the heels of Friday, this jobs report that came in, and then their uncertainty around the interest rates. And so we got the volatility, and this is just AMD, but this happened across many sectors of the stock market. So at the same time, there's a lot of excitement surrounding the upcoming SpaceX IPO, which will be the IPO will be made. This initial public offering will be made on Friday. I believe that's the 12th. So some investors may be selling positions or taking profits in order to free up capital for new opportunities. Whether that's the right decision or not depends on the individual investor, but it can contribute to increased market movement. As I was listening to a podcast this week, I heard a veteran Wall Street trader discussing stock market crashes. It got me thinking about something that used to scare me before I started investing. I used to hear the words market crash and imagine that everything went to zero. What I've learned is that a market crash is not the same thing as the stock market disappearing. And a pullback is generally considered a decline of about 5 to 10% from recent highs. A correction is typically around 10 to 20%. A bear market is usually defined as a decline of 20% or more. These events can feel uncomfortable, but they're also a normal part of how markets function. The important question is, what do you own? When the market falls, companies like Apple, Microsoft, Amazon, AMD, and many others don't suddenly stop doing business. They still have customers, products, employees, and revenue. The stock price may decline, but the business itself continues operating. That doesn't mean that every company survives. Some companies fail and never recover. That's why diversification matters. It's one reason many investors choose broad market funds that spread risk across hundreds or thousands of companies. One of the biggest lessons I'm learning is that investing isn't about avoiding volatility, it's about preparing for it. Good risk management means not investing money you'll need next month. It means maintaining an emergency fund. It means diversifying. It means understanding that declines are part of the process rather than evidence that something is broken. In my own accounts, I'm continuing to invest thoughtfully. I recently opened a small taxable account and started building positions gradually. I'm also close to finishing my Roth IRA contributions for the year, and I'm choosing to be patient rather than rushing into any decisions. What I've come to realize is that patience is a skill. Markets move up and down. Headlines come and go, but over time, ownership in productive businesses has historically rewarded disciplined investors who stay focused on their long term goals. For newer investors following this paper portfolio, remember that volatility is not the enemy, lack of education is. The more we understand how markets work, the less likely we are to make emotional decisions when uncertainty shows up. As always, this is not financial advice. This is simply me sharing my own investing journey and the lessons I'm learning along the way. The interesting thing is that before I started investing, my biggest fear was the stock market crash. Because in my head, I had this vision of like in the 1920s, the market crashed and people was jumping out of their window. And I'm thinking, I just never wanted to be that emotionally distraught that maybe I had put my savings into the stock market and then lost everything that I had been saving for my entire life. So I had this very big, grandioso understanding of what a stock market crash looked like. And so I'm kind of sharing that because that was a big fear and it kept me from investing in the stock market or making these financial investments. I stayed away from it for a very long time. So now that I've spent time learning how markets work, I still respect the risk, but I don't fear it in the same way. A crash isn't something I want to happen, but if it does, I understand it differently than I did a few years ago. That line really captures the growth that a person can make as an investor. We're not pretending that crashes aren't painful. You're simply no longer assuming that a temporary decline means permanent loss. So, anytime the market has crashed, it's always come back. The thing is, when you're in the crash, you don't know how long it's going to be, a year. Is this going to be a 5 month recovery? And I think that's where it's important to, have these other funds with money in them. You don't take your rent, you don't take your emergency savings. You put money into your accounts gradually over time. You put a little bit aside. If you have a Roth, you put your contributions for the year in. Put a little bit in every week, and then you just work your magic. But I wanted to talk about it because yeah, it occurred to me yesterday that we've had several crashes. You had um, the financial crisis. Market was in trouble for about 2 years. Now I'm pretty sure for them 2 years, some people exited their positions, and those became actual losses. But if people had patience and kept those positions, they could have bought into the dip or into the losses. But it wasn't like the market went to zero. You know what I mean? And so I think crash can sometimes be a little misleading, but it still should be respected because apparently I sat through a whole stock market crash last year, not really realizing that that's what it was when we had the tariff wars. And then they had all that selling off was going on around April of 2025 because now we're in June of 2026. And I was a new investor and I didn't like sell out of everything. I was losing, I was in drawdown in some of my positions, with just about all my positions. But I hung in there because I had mentors, people that I would watch on YouTube, and they'd come on every day and they'd share their experience from being in the stock market for decades and how they've seen things like this before. And they helped me normalize the volatility. So he was like, well, the VIX are here and this is kind of what it means. And, you have a couple of options. We don't know when the bottom is. And they would give me some pointers. But the fact that they mentioned that there was a bottom, I knew at some point, oh, okay, well, this isn't going to be forever. This is going to, turn around at some point. And I just hung in there. And eventually, after a couple of months, it turned back around and stuff just started taking off. And so I didn't lose money. But yeah, it's uncomfortable when you're looking at it. So when I look at something like AMD making new all-time highs, new all-time highs, new all-time highs, And then you start to hear different investors talking about, well, anytime we've had a stock market crash, it was always on the heels of everything being all-time highs. So, everybody's a little uncertain. And then you get a hot jobs report where they're saying, well, they're creating a lot more jobs, so we're unlikely to get an interest rate reduction. And then people get nervous and like, well, are we in the right position? What's going on with the AI? There's a difference between being a disciplined, calm, thoughtful, intentional investor. And then you have to know the difference when you're just listening to a lot of noise and being able to separate your decisions from when it's just noise. And a lot of stuff on there is just noise. So that's why I think the diversification helps smooth out that ride, things like VTI and SCHD in particular. And, you should have a plan. Like, there's only a certain amount of money I'm willing to lose, before I'm going to actually exit either part of the position or all of it, or cut my losses and redeploy that capital elsewhere. So I just wanted to, before we get into the portfolio, not that it was bad that I had to say all that, but it was something that I was actively going through. So as I go through these things and get clarity, I like to come back when we check in and just chat with you a little bit about that. All right, so now let's check in with our paper portfolio. So we have right here, we are still up $634. As I recall, I think last week our P&L was 14%, and now we're at 8.64%. So we're still up, but we got a little bit of drawdown on our open, so we're just gonna sit tight. Um, yeah, and take a look at it. AMD, where are we? It's kind of creeping its way back up to $500 again. Today it's up $25 a share. Our P&L is still 86% return on this investment. So yeah, this is where we are. So here we are. Our net liquidity on the account, if we sold everything today, would be $8,634.79. We are no way even thinking about selling our liquidity, but I'm just telling you what the account is currently worth. Um, and I wanted to point something out on Meta. We ended up buying this one share, and you got this little green dollar sign. This is showing that on June the 15th, which would be, today's the 8th, that's about what, 7 days. Meta is going to be paying out its quarterly dividends. So for every share you own, because Meta is actually one position that is a little unique in my opinion, because not only is it a growth stock that's got strong earnings and it's run very well, it pays a dividend, and not many growth stocks do. So if you're in a position to where you can build this position out, it's also a position that you can earn income through dividends. Now at $600 a share, yeah, granted, you'd have to own quite a bit of it to really make it worth your while, but you can just reinvest your dividends. I think I have 5 shares in Meta, 5.5 shares in my regular account. So every quarter I get these couple extra dollars and I just reinvest them back into Meta for more stock, and I let it build itself out. But I did want to point that out, and maybe one day we'll get into talking about um, different assets you can open up and do things like REITs, real estate investment trusts. You can earn dividends on those, and you got some that pay out monthly, and we can maybe have a conversation about that in the future. If you're interested, either hit me up on the Facebook page or in the YouTube comments, and maybe we can put together a little intro class on REITs, because that is a nice way to not only earn stock, earn money owning the stock, but also receiving dividends that can generate income for you in retirement if you can get enough shares of it, and talk about some different strategies with that. So I think that's about all I have for us today, and I hope you have a great day. Keep an eye on the volatility this week, because this SpaceX IPO, I'm not even going to go into what I think about it right now. I'm personally not going to be touching it, but a lot of people are going to want to jump on top of it. And so they might free up some capital. So that's all I got for you today. I hope you have a great week, and I will check in with you next week, and I'll see you in the video. Bye.